Hello, I'm Russell Poynton, the consumer analyst from Edison Group. Today I'm delighted to have with me Rob Parker and Stephen Hopson. Rob is the CEO of Topstiles and Stephen is the CFO. Thank you for joining me today.
Thanks, Russell. Great to be here.
First question, you've just released your interim results for FY24, and we all know that life got tougher as the period progressed. So could you just give what you think are the highlights of the first half's results?
Yeah, thanks, Russell. Well, look, you're absolutely right. The market has been tougher. We know the consumer has been weaker, probably for a period of at least 12 months now, I would think, something like that. We think in that context, our business has continued to perform pretty well, actually, in comparison to market. But yes, the consumer's been weaker. The market is down. Our results over the first half, therefore, sales-wise, we're down about 5.8% year on year. As I mentioned, we do think that's a market share taking performance. So we think the market over our first half is probably down something between 10 and 15%. And on a longer term basis, actually, versus the pre-COVID period, which is a bit of a sort of benchmark for everything, we actually think the market's now down about 20% versus that period. And our business is actually about 11% higher than we were in 2019 from a sales perspective. So we do think the business remains very strong and is taking market share and actually performing pretty well, but in the context of a tough period. Sales obviously being down in an operational year. Retail business does mean profit has come under quite a lot of pressure as well. Stephen will pick that up in a bit more detail. And another highlight from the first half, our Parkside business, our commercial tile sales operation, we took some management decisions, some restructuring action last year. That business has returned a profit over the first half. That's been a really good step on. We've been losing money there for some period of time. So we're profitable in Parkside over the first half. And the Pro Tiler business, which we acquired 40% off 2 years ago, we've now come to the end of that 2-year earn-out period. So we're about to finalise the completion of Pro Tiler. That's been a really great success for the group as well. So that business performed very well. And again, Stephen will talk some of the details there. And Stephen, maybe you want to pick up on some of the financial highlights?
Yeah, absolutely, Russell. So, first of all, as we say, the market has been tough. Rob's covered sales down 6%, so £123 million of sales in the first half. I will just note within that, our online pure play part of the business has been very strong, actually. So up 39% year on year in the first half, and now just shy of £4 million of sales in the first half, which has been good. Gross margins have also been progressing, so they made an improvement across FY23, and now they're up another 1.1 percentage points in the first half year on year, which is good to see. And also costs were very well controlled. So actually costs were £1.2 million lower in the first half than they were in the equivalent time last year, and that's despite more than £2 million of cost inflation. So we've had some good positive movements in gross margin and cost, but exactly as Rob said, with that level of sales decline, profit has come under a bit of pressure. And profit of £3.1 million in the first half was down £1.3 million compared to the previous period. Cash over the first half, just touching on that quickly, cash decreased by about £4 million across the first half. But actually, there is a natural cycle to cash movements in the year. For example, we pay the final dividend, obviously, in the first half, even though it relates to the previous year. So if you look on a sort of 12-month basis, cash was about flat overall, which I think isn't too bad in the context that we're in. And that means that we retain our very strong balance sheet. So we have £19 million of cash at the end of the first half. That gives us about £49 million of headroom against our banking facility. So we retain that really strong balance sheet, which I think is important. Finally, touching on dividend. So dividend, we've maintained that flat year on year, so 1.2 pence, which is the same as FY23.
So as you previously indicated, with this set of results, you've updated your strategy and goals. So first of all, would you talk about that new financial goal that you've set for the company?
As a reminder, last November, when we were out for the full year results, we announced the completion of our last goal, which was 1 in 5 by 2025. That was to get to a 20% market share of the UK tile market. We successfully delivered that 2 years ahead of plan. So really strong market share taking performance over the last few years, and therefore time for something new for the business. And we've switched away from market share to a sales-based goal this time, and we're calling that Mission 365. So the goal for the business is to deliver £365 million of the sales. We think we can achieve that over the medium term. We're not tying ourselves down to a specific year or specific time period to give ourselves some flexibility, but we think that's a really exciting, really engaging, really energising goal, both for our colleagues and hopefully for our shareholders as well. And that's also got within it a profit underpin. We know sales are important, but obviously profit very, very important to the business as well. So we're calling it Mission 365, and then there's an underpin of grow sales, build profit. And we're saying internally to our colleagues and very clearly to our shareholders, we believe this business can deliver an 8 to 10% net profit margin, so adjusted pre-tax profit margin over time as well. So £365 million as of sales, with a minimum 8% net margin over the medium term. We think that's a really exciting goal for our business to really get after.
So that's the financial goal, and that's great. But behind that, there are quite a lot of key drivers for the business. So would you talk about those key drivers?
Yeah, absolutely. Yeah. So 5 key things that we're talking to all of our investors about this week. The first one is, in order to really get after that goal, like £365 million worth of sales, we're very clearly saying we're expanding our addressable market. So we increasingly think of our business as a hard wall and floor surface covering operation, and that then significantly extends our addressable market for the business. So within that, we're therefore reviewing our category strategy. So we've been working quite hard in recent years on extending our categories within the business anyway. We've introduced things like luxury vinyl tile flooring. We've spoken to you about that before. Things like shower panels we've had on trial in some of the stores across the company, and even outdoor tiles we went into a few years ago. So firstly, those 3 categories, they're already in the business, but we think we can do a lot more with them. We can really get after them in terms of better representation, better in-store treatments, better online marketing to get more customers into the business to buy into that offer. And then there's actually new categories that we're not in currently at all, and we think they're really great opportunities for the business as well. So things like wood and laminate flooring being a great example, splashbacks being another one, and then what we're calling double XL porcelain tiles. These are really large slabs, sort of 2.4 metre slabs that are coming out of factories, that we're thinking really hard about what are the applications for those products in the UK tile market, and how do we really participate meaningfully in those. And therefore taking a 5 to 10% market share of each one of those categories is actually a really interesting opportunity for the business. And again, Stephen will talk a bit about what it all means. So that's the sort of first of the 5. The second then is what we call our trader digital experience. So trade's been a historic, really, really strong area of the business. It's 60% of the sales in Topps Tiles, but actually really digitally enhancing the journey for trade, we think is a big opportunity, just getting much better integration of all our different digital platforms. We think there's a really great opportunity for the Topps Tiles business there, and we're going to push into that very hard. The third area is then our B2B strategy. So again, we've had the commercial operation within our business Parkside for some time, but what we've learned in the last couple of years, I would say, with the Topps Tiles business and having a contracts team in there, is actually there's just a much bigger market to go out, the larger national contractors, these kind of people, national accounts. We think there's really great stuff to go out there, and we're being very clear now that we want to participate much harder in that area. And then the 2 extra ones in there are things we're already doing, but we still see lots and lots of opportunity, and we still see lots of opportunity in there. So the Pro Tiler business we've already mentioned, we think that business is it's about 25 million today. We think we can grow that to about 50 million pounds of the sales. That's a great opportunity. We need to keep investing to keep driving the growth within Pro Tiler. That's a really exciting journey. And then the business we started a couple of years ago, Tile Warehouse, is starting to get some traction as well. And again, we've said really very clearly on a number of occasions, that's about a £15 million sales opportunity. So when you combine those 5 things together, we think that can add about £100 million worth of sales to the group. And that's the big part of the strategy to deliver Mission 365.
So, Stephen, it's not news that the markets are weak, and you've got these exciting financial targets now. So could you just talk about how you think you get there?
Yeah, of course, Russell. Yeah. So I suppose if we just have a think about some of the key drivers, if we start with sales, I mean, the market consensus view for sales for this year is about 250 million for us as a company. So it's clearly 365 is an ambitious goal to add more than 100 million pounds into the top line of the group in the medium term. And it is really worth noting that actually the market assumption and the pricing assumption embedded in that plan is relatively modest. So we're only banking on 10 to 20 million pounds of that 115 million coming from the market. The other 100 million pounds are all down to the self-help items that Rob's just spoken about there. So 100 million pounds from sort of us, and then about 15 from the market and pricing. I think looking down the P&L, I think the group's gross margins will probably contract over the medium term by about 2 percentage points. And there's a few things going on there, and largely it's to do with the changing product mix and the changing business mix as we go forward. So I think you see gross margins contract about 2 percentage points. And then we will be investing in a few key areas to drive those sales. Specifically, those are marketing, systems and digital systems, everything around that, and then supply chain, and particularly warehousing. And that's both in Pro Tiler and then also in the group facilities. If we deliver these sorts of sales numbers, we will need to invest in the infrastructure of the group. So I think that's another important point. But even with those investments, a lot of the group's cost base is relatively fixed. It's driven by inflation more than volumes. And so therefore we think that the cost as a percentage of sales will continue to fall over the forthcoming years. And I think if you add all of that together, I think what that does is that improves our net margins, our PBT margins, as Rob said, to that 8 to 10% net margin range, which should give us a minimum of £30 million of adjusted PBT if we deliver this plan.
That's great. Thanks, Stephen. So, Rob, any closing comments from you?
Yeah, thanks, Russell. Well, look, I think firstly, we know the market is tough at the moment. We can see that the consumer is definitely in a weaker place than they were, but we also know the market is cyclical and we won't be in this place forever. In the meantime, our job is to really focus on the medium term. We've got our exciting new goal, Mission 365, £365 million worth of sales with the underpin that Stephen's been through. That's really energising for us. We've extended our addressable market, a 75% increase. Those new categories are really meaningful in terms of opportunity for the group. That takes us from about 1.2 billion to about 2.1 billion addressable market, so 75% more. We feel the business is really well capitalised. We've got capital to deploy. We've got a really clear plan for growing the business, and we're keen to really get after that. And we've got those really clear goals in place now. So I think that's a great journey for us to go on, and we're really keen to start getting after the opportunities.
That's great to hear. It sounds very exciting, and so good luck with the next 3 to 5 years.
Thank you.